Yeah, hello friends, this is Rahul here and as a Chief Executive Officer of Treasury Consulting LLP, and today we would be covering about basis swaps. We are not here to discuss about basis swaps, although there are a lot of videos which are already available in our YouTube platform which talking about basis swap. But what we are covering here is something which has been missed. Of course, Bloomberg TV plan covering that, but something which has been missed in our the social media, not the social media, in fact the financial domain. Today we would be covering about Sing swaps, Singapore dollar swaps. Now Singapore is a place which is a business pro, there is no doubt about that. It's a small country, very small country, just 70 kilometer. But if you look at their central bank, they are very business optimist. They really wish to get a lot of business. They really wanted to speak with everybody. A very I would say reachable people. Even the ministerial level people is very reachable. Departments are very good and so on and so forth. And hopefully we would have our subsidiary in Singapore next year. Now we are always talking about USD swaps. And especially after 8th of November, when Donald Trump has been selected as an American president, we saw that American swaps turned up and at a substantial up, because the 10-year USD was trading at 1.75 on 6th and 7th November, when nobody foresee that Donald Trump is going to be the president of US, and now it is trading roughly 2.5%. Although no, exactly it is not 2.5%, this is roughly 2.42, 2.43, but on a flat note, for the sake of an example, we assume that this is 2.5%. So the 10-year USD, which is currently trading at 2.42%, let's take it that for the sake of simplicity. And we know that Fed is going to hike the rate. We know that Federal Reserve is going to hike the rate, and currently the federal funds rate is trading at 1%. And Fed has clearly said that at least 2 more hikes are imminent. The way Trump is getting aggressive, the way he is looking for an infra plan of $1 trillion, the way he is looking forward to invite more people in the US, like I'm just forgetting, it's a Fiat or some other automobile company which has again invested a roughly $1.5 billion in US. Previously it was Intel, who decided to invest roughly $7.5 billion in, I think, Florida or something like that in the US. So I'm expecting that Fed fund rates would be traded at 1.5% at least by December. And of course that would be generating a reverse carry for a lot of carry currencies. For Australian dollar, it would be like, taking an example, we understand that carry is of two types. One is investment carry, and one is the funding carry. Now for investment carry, like Australian dollar, like Philippines peso, like Sing dollar, and like Indian rupee, they are substantially going to pose an issue. That is for sure. They are going to pose an issue. For funding currency like Japanese yen, again the issue would be coming. But certainly which we need to understand and which we need to appreciate here, that one currency which is also not only acting as a carry, but which the basis is also acting like a carry, which is Sing dollar, swaps. If you carefully see right now, that the curve spread, like the curve spread, which is 10-year USD versus 10-year SGS, Singapore Government Security. 10-year USD versus 10-year SGS is approximately, SGS is greater than the USD, which means that the curve spread is lesser, which is like this, which is, let me write it, USD lesser than SGS. It means that USD is lesser than Singapore Government Securities. And if you are an investor who is sitting in US and you're looking forward to do TRS, which is total return swap, and you have a pool which is in US dollars, and on the contrary you have a pool, somebody else you have a pool which is coming in Singapore dollar, then it is again easy, because the basis swaps because the basis swap between US dollar and Sing dollar is relatively even for 30 years. Sing dollar is having an advantage over the US dollar. So even float to float Sing dollar, even fixed to float USD to Sing dollar, this currency is not only offering you and as a carry currency, but at the same time the volatility in the currency is limited. Now if you carefully see today, then the dollar to Sing dollar is at least between 1.39 to 1.42, and by the time which I'm writing, by the time I'm speaking, Sing dollar is trading at 1.40. So for a carry investor, this is the beautiful thing, that my currency volatility is limited, it is ranged. Even at 10-year, Sing dollar is better than US dollar. Even for a total return swap, Sing dollar is better than USD. This is about for this video. And if you are an investor who seriously wishes to invest, who really seriously wishes to, wanted to diversify their risk for a dollar denominated asset to some other carry currency asset, I think Singapore dollar is a perfect option. In case you need any consulting, you can come to us. And not to mention that our fixed income platform is on the way, and hopefully our March magazine, or which is the Maverick Treasurer, which is coming by the end of this week, probably Sunday evening or Saturday evening, we are planning the launch of the magazine for our March version. Thank you and have a wonderful time ahead.